Now in today's video, we are going to be talking about the top 3 stocks and ETFs that you guys need to buy and stocks that I'm buying. So I hope you guys all enjoy it. If you guys are new to the channel, my name is Carter. I've been a full-time swing trader and trader in the market. I really find stocks that I see are undervalued and have a ton of potential. So that's what we're going to be talking about today. If you guys want to learn more about swing trading and trading in the market, check out our school down below, the Swing Trading Masterclass. And the great thing about it is right now we are still offering our 4th of July sale with code America for 50% off. We have private live streams, we have quizzes, we have lectures, everything you guys need to get started with swing trading and trading in the market. So check it out down below. And guys, trust me, I know when people think of YouTubers selling courses in schools, they think it's a scam. But guys, I don't believe in a get rich quick. I teach people strategies that work, and I don't believe in alerts. I teach people how to find stocks with opportunity and all that stuff. So at least check it out. Let me know what you guys think. I'll see you guys in there, and let's jump into this here. So moving on. So stock number 1 isn't actually a stock. It's actually an ETF. Ticker symbol URA. Now, what this ETF pretty much is it's a uranium ETF, nuclear energy. I really think that with the overall rise of artificial intelligence, with technology, and all of that stuff that, we see a lot of potential in, I really think we need something to power that stuff. We need electricity to power that technology, and that's where uranium is going to play a huge factor out of it. And you guys can see that with the rise of technology, we've seen a little bit of some growth here, going from $18 to $33. Beautiful upward trend. Looking at this here, you guys will see the top 10 holdings in here are fantastic here. We have tickers, we have CCO, we have Physical Uranium Trust, we have Next Gen Energy, and a variety of other uranium companies that have a ton of potential. Even this one here, ticker symbol CCO, looks great. And the great thing about this stock here right now, or this ETF really, is it's sold off from $33 to $29, and it's trading near and around these moving average lines, which represent good support for this ETF. You guys can see it hits it when we get some good buying pressure. So we could easily see a move going back up to some highs, going from at least 29 to 30. $3, which would be about a 13% return. So I'm buying as much as I can of this. And as we scroll down here, you guys will see that there's a huge amount of people and companies that really need this. This isn't something that you don't need. You need this. And I really think that looking back in 5, 10, 15 years, we're going to be wishing we would have bought more of this ETF. A lot of people right now are so focused on technology and AI that they don't seem to realize that something needs to power that. We need electricity to power that. So URA is definitely going to be a huge factor in that, in my opinion here. And it's an ETF, so you get the growth of all of it rather than just being a little risky and going with one individual company here. All right, moving on to stock number 2. Stock number 2 is Amazon. Now, Amazon here, we all know it. Amazon has seen good growth. It's seen a lot of volatility. As we look at the chart here, you guys can see that it sold off from 180 all the way down to $80, back up to 200. Amazon's been on this non-stop roar of buying pressure, and honestly, their metrics kind of make sense, right? We've seen good revenues. The revenues up 12%. Their cash flow is doing well, up 297%, which is always really good. Now, their gross margin is increasing as well, and their net margin is up as well, up 192%, which is absolutely fantastic. Now, as we look at this here, one thing that I do think is important here is going to this income statement and really analyzing this company. Amazon, we all know it, but look at all this green, right? The revenue's up, operating revenue, cost of revenue, gross profit is up 53%. So they're doing great things. The company's heavily invested into AI. It's heavily invested into technology. And the biggest thing about this one here, in my opinion, is looking at this. The average analyst price target for this is $221, and given its current price of $201, that would be a return of near and around about 13-14%, which is absolutely fantastic. The average analyst is giving Amazon a strong buy, with none saying hold or even sell, and that's based on 42 analysts. So I really see Amazon having a ton of potential here. All right, moving on to the last and final one here is going to be Meta. I understand Meta has been on that very similar thing of nonstop roar of buying pressure. Now, the thing about this is the average analyst out of 43 analysts are giving it a buy rating, 90%. Now, the thing about Meta, in my opinion, is looking at these price targets, $536, which is insane. So I really think, yes, that's a return, probably along the lines of, we can actually draw it out, but it's probably going to be not as large as some of the other ones, this is like 2-3%, but we also see a lot of analysts giving returns the highest at 625, and given what Meta is investing in, I really think that we're going to see a ton of great buying pressure out of this. Good advertising revenue, the net margins up, the EPS is up, the total revenue is up 27%, the balance sheet looks well, their cash flow is up 37%. So yes, I understand that Meta right now, we are paying a little premium for this stock, but their metrics and their fundamentals make sense. And yes, all of these companies, or most of them, are up significantly in the past year, but I really think looking back in 2 to 5 years, we're going to be wishing we would have bought it at these current prices. And another good strategy that I would recommend is to dollar cost average it. Dollar cost averaging is a great way to invest into growth stocks and growth ETFs, because you invest consistently rather than just dumping in a bunch of money. You can get a good average price because you're investing consistently rather than just a lump sum. So guys, these are the top 3 stocks and ETFs that I am buying this month. I hope you guys all enjoyed it. If you have any questions, feel free to ask down below. Don't forget to check out our school, and I'll see you guys in the next one. Like, subscribe, and I hope you guys have a fantastic rest of your day, and take care.